Well, holy smokers, guys, today we're going to talk about a call options move I made here yesterday, okay? But first off, I gotta give some love to anybody that owns these stocks with me, okay? Because I know some of you guys will buy some of these stocks that I'm invested in. I just gotta say congrats to you guys because there's three particular stocks here today that are doing absolutely unreal that I own and a lot of you guys probably own, okay? Slack. Amazing day. Basically, an announcement came out that Salesforce might end up buying them out. The stock just went crazy after that news. So congrats to everybody that owns that stock, okay? Nordstrom, another massive day for this stock. This stock's been trading mostly $28, $29 all day. Absolutely crazy. I mean, this was a stock that was $11 or $12 like literally 3 weeks ago, okay? So congrats to anybody that's gotten in Nordstrom in the past, let's say couple months, because you are making money hand over fist, okay? And last one is The Very Company, okay? Congrats to anybody that owns that one. That stock's making a huge upward move here today. I've seen it up, 15% plus most of the trading day. So I just want to say congrats. I mean, this video is not about those stocks, but I just want to say congrats because those moves are epic in those particular stocks here today. And by the way, S&P 500 and Dow are down today, okay? So it's not like, oh, the whole market's just so amazing today. No, it's very, this is why it pays to be a stock picker at the end of the day, because even in days when the market goes down, if you own great companies that produce great results, man, a lot of money to be made, okay? So anyways, let's get into what we're talking about here today in this video, okay? Yesterday, I bought $21,000 of call options in one particular stock, okay? Now, I mean, that sounds like a really large amount of money to be playing around with options, okay? So in this video, we're gonna get into what stock this is, okay? We're gonna get into why am I so bullish on this stock that I would buy $21,000 worth of call options. I don't think I've ever bought that much worth of call options ever in my life in terms of one day into a particular stock. And then after that, we'll get into basically why would I buy $21,000 of call options, okay, rather than not just like buy the stock straight up with that $21,000, okay? We'll get into that as well in this video, as well as we'll also talk about if I'm gonna buy more options in a stock, more shares of the stock, things like that, okay? But real quick, 3 things we've got to address before we even get into this video, okay? Because I think these things have to be said, okay? Number 1, these options could expire worthless, okay? We'll talk about the strike price, we'll talk about the premium I paid, and all those sorts of things. And essentially, it's very possible these options could expire worthless, which would mean essentially I would lose all $21,000, okay? That has to be said before we get into this. Number 2, remember, I have millions of dollars invested in the stock market. So although you might hear, a lot of people could come across this video that don't even watch my channel. They don't know. They're like, maybe this guy has $50,000 to his name, and gosh, he's putting $21,000 in stock options. I have, obviously, you guys know the type of money I have invested, okay? So $21,000 is a very, very small percentage of the money I have in the market, essentially, like a very, very, very small percentage. And so I'm willing to take that risk on something like this because it's a very, small amount of money relative to like how much I have in my accounts in total, okay? And number 3 is I rarely do option plays, okay? I'm not some big options trader. I'm not super into options trading, okay? I do moves few and far between. When I see a big opportunity and I just feel like the stock is so massively undervalued, sometimes I will buy long-term out calls. This is usually what happens, okay? And so I'll buy something that expires like 2 years from now. These options we're getting into here today expire more than 2 years from now, okay? So like they're really considered long-term call options in this particular stock, okay? Hope you guys enjoyed today's video. As always, if you don't mind, smash that thumbs up button. It helps out the YouTube channel massively. I appreciate each and every one of you guys, and that kind of shows some love that you appreciate me sharing something like this. I'm doing a move out there that's different than what I usually do, because usually you guys know me, I'm just buying stocks straight up. So for me to tell you guys about an options move, this is very few and far between. So hope you guys appreciate that. Also, if you're looking to try to get in my private stock group, Financial Fortress, make sure you fill out an application within the next week or 2. Try to get on the call with somebody high up from my team essentially about that program, because essentially anybody that signs up for a 2-year membership within the next 2 weeks, you get a free month of coaching with a 6 or 7-figure coach. So it's pretty dang epic. It's a pretty epic deal we're doing for Black Friday and Cyber Monday. That's going to be linked in the description. Also have that as the pinned comment as well, okay? Let's get into this, guys. So in this video, let's talk about what stock, okay? What stock is this? Well, this particular stock I feel like this stock is going to 2x or 3x within the next 2 to 3 years, okay? I would say there's an 80% probability, 80% that this stock 2x's or more within the next 2 to 3 years, okay? So I am feeling extremely confident about this one over the next couple years, all right? And what stock is this? It is Dropbox, okay? Dropbox stock is the stock up here, okay? Dropbox is about a $19 stock, somewhere around there, roughly. Big cloud company. A lot of people that have small businesses, mid-sized businesses use Dropbox. We'll talk a little bit about some interesting things that are going on with their business model that I just don't think Wall Street's picking up on yet. But believe me, as what happens most times in most stocks I get in before Wall Street, they all figure it out eventually, and then they jump on board, okay? So Dropbox here, under an $8 billion market cap on this particular one, a forward P on the stock of 20, okay? 20. And keep in mind, Dropbox will beat numbers a lot of times, so don't be surprised if next year their earnings are stronger than actually what analysts expect on average, okay? So this company is trading extremely cheap, okay? That's the best way to put it. I mean, the market in general is probably at a forward P of 20 or so. And this is a growth company. It's a company growing double digits and expected to grow double digits for years to go in the future. I mean, it's crazy. They have almost no customer concentration. It's a magical business model, recurring revenues, which is like the holy grail of business. I mean, it's a beautiful, beautiful thing, okay? And when it comes to Dropbox, cash loaded to the sky. Well over $1 billion, actually over $1.2 billion just in cash. This isn't like some massive company that has like a, $80 billion market cap on it or $150 billion market cap. This is, we looked at a $7-8 billion market cap. So to have $1.2 billion in cash is a crazy high number, right? So you're looking at that, and that a lot of that money will probably be used on share repurchases or acquisitions of other companies that are growing fast in their type of space, which is the enterprise, right? Also small business space, making people's lives easier when it comes to documentation, documents, all those sorts of things, okay? Dropbox, beautiful. And when you think about Dropbox, just don't think of it as this desktop thing or this app you might have where you store documents, like I've been using them for probably over 5 years now. It's not just about that, and it's not just about the smart workspace opportunity for this company over the next, let's say, 5-10 years, okay? It's also about this acquisition they did about 2 years ago, which is the perfect acquisition at the perfect time, because guess what? Because of Rona, that has made like the move to paperless and like electronic e-signing of documents like way faster than ever thought before. And HelloSign has a great opportunity to be the number 2 player in this market long term, okay? And they're integrated with Dropbox, okay? So all these e-signing of documents, I mean, we all know the company that is the big dog in the space, that's DocuSign, but this HelloSign is extremely loved by people, okay? As far as pricing, they got a ton of different pricing packages, whether you're a small business, mid-sized business, a large business, anything across the board, HelloSign is theirs for those people, okay? It gets like a 4.5, 4.7 out of 5 stars on most of these review sites and whatnot. I mean, that's on 563 reviews there. People really love this product, okay? HelloSign is the easiest way to send, receive, and manage legally binding signatures for your business of any size, okay? So I really like this one. Keep in mind, DocuSign, they're the big dog in the space, okay? They're the number 1 player in this market, right? DocuSign has a market capitalization of $41 billion, okay? $41 billion. Like that is, you know what I mean? Like think about this, like how big this market is, how big the TAM is that HelloSign's going after. People love that product. They're integrated with Dropbox. They're going to continue to expand that huge over the coming like 5-10 years, never mind over the next 2 or 3 years, right? And here you are with DocuSign, the big dog in the space, having a $40+ billion market cap. Dropbox is at $7.8 billion, okay? And when you buy Dropbox, the company, right, you're getting a great cloud company, right? You're getting smart workspace, which is a whole new endeavor they're going into this year specifically and moving into future years. That's a huge opportunity for them. And you're getting potentially the second biggest player in the world long term when it comes to e-signing of documents with HelloSign there. That is epic, okay? For $7.8 billion, this is why I feel so dang confident that I'm willing to go out there and buy $21,000 worth of call options in a stock, okay? Because I'm just looking at this company across the board and I'm dang excited, okay? Drew Houston, he's the one that runs this company. He's a founder of the company. You know, he's still as engaged in the business as ever before, and he's actually even going to do a role that's really more focused on just like the vision type stuff with this company going forward. And I love that he's given up more like the day-to-day, like just what I call the busy work type stuff to another gentleman, and he's going ahead and Drew's just focusing on the vision of this company, executing on that. What's the big opportunities they can go after, okay? And you know, he's in with everybody you want to be in with. He's on the Facebook board of directors, one of the biggest tech companies in the world. He's Zuckerberg's friend, right? You know, he's investing in companies with Mark Benioff, who's, guess what? Mark Benioff, he runs Salesforce, right? Salesforce, they're trying to do a deal right now to buy, what are they trying to buy? They're trying to buy Slack. We covered that at the beginning of the video, right? And so if Dropbox stock wasn't respected over time, you know, don't be surprised if, you know, maybe Salesforce would try to buy something like a Dropbox for $30, $35 a share or something like that, okay? It's definitely a possibility. By the way, this is completely random, but I was looking up some stuff around Drew Houston, and this just came out a couple days ago. He's actually leaving California, moving to Texas. Interesting, eh? Okay, all right, guys, so needless to say, I'm very bullish on Dropbox. I mean, you know, if you follow my content heavily, you probably already know that. If you don't follow that heavily, now you know, okay? I am very bullish on Dropbox over the coming years. Not just the next 2 or 3 years. I'm bullish on this company over the next 5+ years, okay? And I've been buying the stock heavily and, you know, obviously with options, okay? Now, why $21,000 specifically of call options and not just buying the straight stock, okay? So here's a screenshot essentially of what I have in those Dropbox options right now, okay? Jan 20, 2023s, $20 strikes, okay? As far as my cost basis, I paid $4.70 for them there, and that cost me just over $21,000 there. And I own basically 45 contracts as of right now. Each contract represents 100 underlying shares, so essentially I have the power to 4,500 shares as of right now underlying there, okay? Now, this is essentially when I buy call options, if you're confused at all, this is essentially a bet that I believe this stock's gonna go up and likely go up substantially. But just at the end of the day, like a call option, you buy a call option, you're betting that the stock's gonna go up, right? You could be potentially hedging a position if you had a short position or something like that, then you go ahead and buy call options to kind of like hedge that position. But most people, you buy a call option, you're buying it because you think that stock price is gonna go up a bunch, okay? Now, these expire in January 2023. So I have approximately 2 years and like 2 months roughly, right? Before these expire. I think they expire kind of like the mid-January time, like I think it's around January 20th if I recall, okay? The strike price, very important, is $20 on the stock, okay? The strike price that I went ahead and bought at, okay? So essentially what that means, if Dropbox is under $20, in January 2023, assuming I'm still holding these options, I'm gonna lose all $21,000 of the money, okay? So it's not like when you buy a stock straight up, where you buy a stock and it's like it needs to go to zero for you to lose all your money. This, totally different scenario. Literally, if the stock's under 20, I'm losing 100% of that $21,000, okay? The premium I paid yesterday was $4.70, so a little under $5, okay? Now, for this video, we're gonna make it simple. We're just gonna say I paid $5, which is a worse price, okay? That's probably what I would have had to pay, let's say today if I was buying with the stock up, but we're just gonna use it for simple sake numbers, okay? So let's say I paid $5, all right? So keep in mind, I can sell the options at any time. I don't have to hold these till January 2023 if I don't want to. So let's say the stock shoots up like crazy over the next, let's say 12 months, okay? And let's say, you know, we're in November of 2021 now, okay? And I'm holding these options, and let's say Dropbox is now $35, $40 a share, okay? The premium I could get on that would be substantial, okay? Let's say, for instance, the stock is at $35 a share, right? $35 a share. The premium I could get on those $20 strikes, I'd probably be able to get $30 premium, okay? Like a crazy number, okay? And obviously when you pay, you know, $4.70, like you're looking pretty darn good, okay? So I could definitely possibly sell these off way before January 2023 if I choose to. As of today, as of recording this, I'm gonna probably hold these till January 2023, okay? That is the plan going in. But like I said, if I wanna get out, if I find something better out there that I wanna put some money in a year from now, whatever, I can always make that move, especially if the stock goes crazy over the next year or so, which is definitely a possibility with this one, okay? But my intention is to hold these until pretty much almost they expire, right? Now, $25 is a break even on this, okay? That's my break even. So I'm gonna get my money back. Now, I will say that would be sad. I would be super disappointed if all I do is get my money back with this one, okay? Keep in mind, I gotta tie up $21,000, right? To make no money over, let's say 2+ years, 2 years and 2 months. That would be extremely disappointing. There's no way I want to get beat out by a savings account, right? So I would be extremely disappointed. I obviously don't think that's going to happen, but it could, okay? Once again, if the stock's under $20, I lose all $21,000 I just put into this, okay? I think that's extremely unrealistic. I think it's extremely unrealistic that I lose all my money on this position. I think it's extremely unrealistic that I basically break even on this position. Let's put it that way, okay? Here's why. The stock's $19 today, right? It's not even that dang far away from basically where I need it at to not lose money or to break even, okay? Then keep this in mind, okay? This company's growing EPS very nicely and should continue to grow EPS very nicely over the next several years, okay? From 50 cents last year to 89 cents expected this year to roughly around $1 expected next year, okay? So you put that together and it's like, okay, things are going really well there. Revenue-wise, companies should do around almost 15% revenue growth this year. Next year, they're expected to do around 11% revenue growth. So those are very nice numbers, right? And the company trades cheap. It's not like I'm paying an arm and a leg like all these others, 98% of these other stocks out there that are growth stocks, right? This one's at a 24p. It's as cheap gets in this type of space, right? So at 20 PE, you got a growing company. I mean, in order for me to lose money on this, the entire company would have to fall to pieces. I mean, just completely disintegrate. It doesn't make any sense. The company would have to start shrinking revenues. The EPS would have to start going down in a major way. There would have to be no belief from Wall Street at all in this stock. It's super unrealistic. I would say there's less than a 10% probability that this stock is under $20 in January 2023, unless maybe it went up to $100 and they do a 5-to-1 split or something like that, okay? I mean, that is so dang unrealistic. But it is a possibility. As with all things in the stock market, you always have to take everything into account. What if this happens? What's the chances this happen? I would say that probability less than 10%, okay? Now, why not just go $21,000 in the stock straight up, okay? So keep in mind, if I bought the stock straight up, and let's say the stock was at $20, which remember, in the call option scenario, if it's $20 or under, I lose everything, right? At $20, I still make money in the stock, right? Because I buy it at 18 some change, 19, $21,000 in. I made money. It's a very small amount of money, right? But I made money, right? At $38, so let's say the stock goes to 38, right? Because let's say 18, 19, somewhere around there. Let's say I paid $19 for the stock straight up. I 2x my money, right? That's when I 2x my money and I'm looking really, really good. And keep in mind, I've mostly just been buying shares of Dropbox because I love the risk reward with this one. And I think it's a pretty high probability the stock's 2x's or more over the next few years. And so that's what I've been doing essentially, okay? But here we go with the call options. And here's where things get really, really interesting, okay? So 2250-ish, somewhere around there, right? I would lose 50% of my money. That would obviously be bad, okay? $25 is my break even on those call options, okay? But we've talked a lot about the negatives in regards to how I could lose money. But remember, I'm getting in this because I think I'm gonna make a lot of money, right? Here's where I start making a lot of money, okay? At $30, I will have $42,000 essentially, okay? If the stock goes to $35, I will have $63,000. If the stock goes to $40 between now and January 2023, and this is assuming it's actually there in January 2023. Keep in mind, if it went to 40 in the next year and I still got a year till expiration, I would make way more money than this, okay? We're just assuming in January 2023 it's at those prices, okay? At $40, I have $84,000 now. Remember, we only put 21K in, okay? And at 40, I'm at $84,000. $21,000, okay? Now, where I think this stock is going between now and the next couple years, I think the stock's going to $45 to $55, okay? That's where I personally believe it is going, okay? At $45, I'm at $105,000. At $50 stock price, I'm at $126,000. At $55 a share, I'm at, roughly around $147,000, okay? That's where I believe this stock is going over, let's say the next couple years, okay? So needless to say, I should do really, really well if things work out the way I think they're gonna work out, okay? Now, if those things go even better, which definitely has happened with stocks I've been in the past, where it's gone even much, much better than I ever expected, right? Tesla, I never expected that one to be nearly up as much as it is today. I mean, maybe in 5 years from now, but my goodness, okay? So $60, let's say it goes to 60, I'm at $168,000, and remember, my capital in is only $21,000, right? And at 65, I'm at $189,000 on a $21,000 investment, okay? So needless to say, if this stock makes some major moves up over the next couple of years, I'm looking really, really good, okay? Obviously, we talked about it. I could lose all my money if the stock does nothing, goes down, something like that. But man, if things go the way I think they're gonna go, I'm gonna get a pretty good ROI on my money. A lot better than if I just bought the stock straight up, okay? But with that being said, will I buy more Dropbox call options? Because I got this position, and you look at those gains I could potentially get if the stock goes to where I think it's going over time. You got to say, man, maybe load up on some more. Maybe buy another 21,000, another 21,000. Probably not, okay? I'll probably only buy shares from here on in, okay? And the reason is essentially, remember, there's a risk, right? There's a risk. There's obviously the chance I could lose everything in this, right? That's the danger with obviously call options, right? So I have to always think about not just the reward, but the risk going in, okay? I buy shares of stock. I think there's an extremely low probability I lose money on the stock over the next 5 years if I hold it for 5 years, right? And I think there's an extremely high probability I 2x, 3x, if not 4x my money in this stock over the next 5 years if I hold this stock, okay? That's really, really attractive versus, obviously in a call option situation, I'm under the gun, okay? I have 2 years and 2 months, okay? I need everything to work out in the next 2 years, 2 months, Wall Street to start getting this stock. Like, what if the company executes phenomenally? What if everything goes great? They grow. And the forward P goes down to 7. And, they're making money hand over fist, the cash flows are crazy, but Wall Street doesn't care. Investors don't care. They're like, I don't want to buy Dropbox no matter what. What if that happens? I've seen it with other stocks before. That could potentially happen, right? That's why I have to limit risk. It's all about the risk reward. I got some huge reward potential here, but I can't go too crazy with it and all of a sudden have 50,000, 100,000 in terms of capital I put in, because then we start getting into some territory where it's like, okay, now I put in $50,000 into this, $100,000, and that could go to zero. Oh, that's a little much for me personally in terms of taking that level of risk. I'll take this risk, but not going to like 50K, 100K. I'm good where I'm at with the call options, but I'm absolutely interested in buying more and more shares of stock because that risk reward is just way too crazy to ignore, okay? Now, if we're talking about options trading in general, and we're talking about another move I could potentially make in regards to Dropbox, outside of call options, it could potentially make sense for me to sell put options on Dropbox, okay? And here's why. I already feel Dropbox is extremely cheap stock, okay? I feel like it's a deal and a half anywhere remotely close to $18, $19, $20 a share. I feel like it's like stealing money essentially, okay? And so I already feel like that. Now, if I sell essentially put options, okay, I get to make premium on that. And if the options go up over time, I don't have to pay out that money and I get to make premium. Now keep in mind, if the stock price goes down, I get to buy a bunch of shares for a much cheaper price, right? Because obviously if the stock goes down to 15, I have to pay out for that essentially, okay? But I'm getting to buy shares for, let's say, $15 a share or something like that. So when you kind of look into, selling put options, for somebody in my scenario, where I'm looking to buy more and more of the shares, it can make a lot of sense because I can make the premium, and hey, if the stock goes down, that's fine. I'm committed to buying it. That's fine. I'm more than willing to buy Dropbox shares if it went down to 16 or 15 or 14 or 10 or something like that. Super unrealistic, but I'm here for the stock if that was to happen, obviously, okay? So yeah, if we're thinking about anything else options related I could do with this one, It's all about selling put options because that could really benefit me in a massive, massive way with the type of situation I'm in with this stock. Okay. Hope you guys enjoyed this video. As always, if you don't mind, smash that thumbs up button. It helps the YouTube channel out massively. It lets me know you guys enjoyed a video like this where I actually talk about some options. I hardly ever talk about options on the channel, but hey, I did a big move and I thought this would be a great time to just go ahead and talk about stock options a little bit, all right? If you want to join my private group, there's a lot of reasons to basically join in there, okay? But one of them is I actually have an options section where I teach a ton of different strategies in there. If you're ever looking for options, we actually have probably one of the best options, definitely the best option trader I've ever met in real life. He's one of our 7-figure coaches. He's made more money than anybody I've ever known from options, like guys just on a whole other level. And yeah, we actually have an options only chat in there as well, which we have a lot of very good options traders in the private group. So if you ever wanted to, obviously we're not focused on options in there, but that's just another piece of the puzzle. So if you're ever interested in that, definitely check it out. And like I said, anybody that signs up for a 2-year, essentially you get a month free of one-on-one coaching with a 6-7 figure coach. Okay, so pretty epic. Thank you for watching and have a great day.